I think we have a good quorum. We can start. My name is Peter Chege. I work with EABL Access Africa. I'm head of product development and innovation. We have done trainings on NSE previously. That is NSE share trading. We have also done for international markets. Today, I want us to go through corporate boards and how they work. Then from Wednesday, we start again back to NSE. Friday's international market. So for NSE, it will be shares, corporate boards, and also government boards. International markets, we have ETFs, exchange traded funds. Then we have stocks, single stocks. We'll also be venturing into others like Forex. In addition, we'll also be running pension as we go on, money market fund, because all these, they go hand in hand. Interest you earn from money market fund, you can either put it in pension, put it in international market, or put it in NSE. When you earn dividend in NSE, you can put them in pension, money market fund, or even international market, just like that. So today, the purpose of this training is corporate boards, and we will be looking into the new EABL, East Africa Breweries medium-term notes. In simple terms, it's a corporate board for those who have invested before in corporate boards. Confirm you can hear me on the chat. The recording and notes will be available. Let me share the WhatsApp community. That is the link to the WhatsApp community. Let me see if I can get, it's not AIB's group. It's personal training group where now we run all these. Remember, in AIB, you're only limited to NSE and international market. I also want to expand in other platforms. So let me pick the one for Telegram, for those who may be on Telegram. So that is a Telegram link. So Telegram is a channel where you can join group for discussion. WhatsApp, it's a Telegram, it's a WhatsApp community. I'm also working because I realized after you reach 1024 members, they limit you from commenting. We used to discuss on that community. I'm working on Discord channel where now we can start discussing all these. Hopefully I'll be done by next week. Then we can start joining. There'll be free interaction with the members. I don't want to create WhatsApp groups because of exposing the numbers. I don't want to expose anyone. I usually mind about privacy. So let's go straight to today's presentation. So let's start by understanding what is a board. A board is just a role that you are giving either a government or a private company. So instead of that government or company going to take a loan from the bank, they decided to borrow from the investors out there. So it borrows from you. They guarantee you a return and also a period where they return your funds. And if you have any question, remember to put on the chat. Remember to put on the chat. And for those who are joining, we are just beginning with just the basic introduction to boards so that you understand what boards are. With that, now you understand what corporate boards are. So again, board is a loan you're giving, you as the investor, you're giving to government, if it is a government board, or you're giving to a private company, if it is a corporate board. So when you buy that board, you're actually lending your money to the issuer. Issuer is the entity that is borrowing. So if you go to NSE and you buy a board for EABL, you're actually lending them your money. You're giving them that 10,000, 20,000, 100,000, 1 million, you're giving to them. Then they agree to pay you interest regularly. That interest is called coupon. So most of them, they usually pay semi-annually. So every 6 months, you get a portion of your interest. And then at the end of the board period, which is called maturity, like now for EABL is 2030. So that is when the board will mature. That's when EABL will return your money in full. It's called maturity. They will return the full amount you gave to them. If at start you gave 1 million, 2020-30, you get back your 1 million intact. Then in between 2025 and 2030, you'll be paid some interest. That is like now for EABL, they're giving 11.8% annual. So the way it is calculated, the amount that you're giving them, if it is 1 million, times the interest of 11.8, you divide by 100. So that is the interest you'll be getting annually. You divide by 2 because they are paying semi-annually, May and November. So let's take an example. EABL, they have floated their board, and the minimum you can invest in is 10,000. But you can top up. We'll see when we log into that platform where you can apply for that board. You can top up with a multiple of 10. That is, if it is you're starting with 10 and you want to add before they close, you can add another 10 like that. So if you invest 10,000 at a rate of 11.8 per year, it means that 1 year you're earning around 1,180. That is your 10,000 times 11.8 over 100. So that comes to 1180. So then how is it paid? It will be paid twice in 1 year. That is semi-annually. So you divide by 2. So you get 590 in May 2026. Then in November 2026, you get another 590 directly paid to your either bank or M-Pesa. I think the prospectus are clearly stated. Anything, there's a caveat to what they can pay to M-Pesa. So if they are targeting to invest more than M-Pesa limits, then you opt for the bank. We'll come to the requirements for investing in EABL. But I hope now you have understood. You put your 10,000 now. Every year, they'll be giving you 1,180, but paid semi-annually. That is 580 first 6 months, 580 next 6 months. So May, then November. Then in 2027, May, you get some amount. Then November, the same up to 2030. Then after 5 years, that is 2030, they will return back your 10,000 intact plus the interest for that 6 months, the remaining 6 months. So that's how bonds work. So you already know before you even invest your money how much you'll be getting every 6 months. It's not like shares where you have to look at the market, how it's performing, share price, make a decision when to sell at a high price. For bonds, if you decide to hold to maturity, you assured your interest every 6 months. Then at maturity, you get back your full money plus the interest for the remaining 6 months. So then why would government and companies issue bonds? One of them is to raise funds for projects. If they want to expand into maybe say other regions like EABL, if they want to expand, remember they can't list again at NSE to raise more capital. They only have an option maybe of issuing rights issue, which then may increase the number of shares in the market. Instead of that, they might decide, let's just borrow from the public. Whether you have shares or not, you're entitled to buy the bond. It's not a must to have the shares for you to buy that bond. So you loan them, they use that money for that project, then they will be paying you that interest. It could be for expansion or refinancing a debt. And I think for EABL, the clarified part of it is to refinance, to restructure their debt. So instead of them borrowing now from the banks, which the interest may be high, and also they may be required to give collateral. Remember, most of these corporate bonds, they are not they are not covered by any collateral. I think for EABL is unsecured, but that does not mean they will default. Instead of going to bank where they will be requested to give collateral, they come to the public, where they just ask you to loan them your money. They will list the board at NSC. If you want your money, you can always sell to another person in the secondary market. So the issuer will get the funds, then you as the investor, you get that interest regularly. And the board, remember, it's not affected by the price if you are not selling in secondary market. If you are holding to maturity, remember, you get back your full capital. If, however, you decide you want your money early and you decide to sell in the secondary market, you are subjected to the price, and that will be dependent on the tax, the interest rates. If they are going up, interest rates, prices will go down for the board. If interest rates are going down, prices may go up. But it's not a must you sell. You can hold to maturity. As we go on with the training for boards now from next week, you start to understand how interest rates affect the pricing for the board. So now for EABL, they are borrowing through the board to manage existing loans. Remember to restructure their loans and also support its operations. In the previous, I'm not sure whether I've done that for training on dividend trap. We have not done that training for NSC, where a company gives you a dividend, but that dividend is financed by borrowing, which is not sustainable. I explained how it works. Some of these companies, that's what they do. They borrow money from the public, then they use that money to pay a dividend. Remember, in their financials, they announced a profit, decided to give a dividend. But in their actual cash flow, they don't have that money to pay. They may decide, let's borrow, pay that dividend. Remember, these are loans they pay back. When it matures, what do? They come back to the public, issue another board to repay, to restructure the existing loan. No? So we'll come to that when we are dealing with NSE shares. But I hope now you have understood corporate boards, how they work. It's the same thing for government boards. Government borrowing from you, maybe to finance a project, it could be infrastructure. Then you agree the interest rate they give you and the period for that board. You can decide to hold that board to maturity for that duration. No? You'll be accruing, you'll be taking that interest, or in between, you can decide to sell in secondary market. So the way you apply, before we go to the next slide, for government boards, you use their system. It's called CSD do platform. You create account electronically, then you bid. For corporate boards, they go through broker. For EABL, however, they decided to also have an electronic platform. We'll see it at the end, where you can bid for that board. That is the first time the board is listing primary market. Like now, this board is in the primary market, where you get in the first time. For corporate boards, you need a CDS account that you buy shares with. So for you to apply, you need to have opened a CDSE account with a broker. We'll see in the platform where you select broker, then you put in your CDSE number. Once it is allocated to you, you view it the same way you view shares on broker platforms in your portfolio valuation. So that is the difference between government board and corporate boards. Government boards, there is a separate system, CSD-DO platform for primaries. Then secondary, it is the broker now who helps you get the person to sell. For corporate boards, you need a CDS account, the normal shares CDS account. That's the one you open. Once you have your CDSE account, you just now go either to the broker. I think currently it is ABSA Security if you are going physically. However, they have a digital platform where you can apply from. So then why, as an investor, would you want to buy a board and not the other products like shares? First of all, there is a steady income. there is that fixed interest. It will never change until maturity of the board, unless you decide to sell in between. So it is great for passive income. For those of us who don't have time to track prices or even interest in money market fund, you can get into boards because immediately you put your money there, you actually forget about it. You only wait for me, you go and look for your interest in the bank. November, another interest. Then when the board matures, you actually go back to your bank, find the full amount there plus the remaining interest. So it gives you that comfort, and there is steady income. Most of the boards, they are good for people who are actually targeting retirement. Because that time you don't have time to struggle with prices, share prices. Are they going up? Are they going down? Am I losing? Am I making gain? Yeah, you put just your money there. After a period, 6 months, interest comes to your bank. If it is good amount you have invested, then be sure this interest can serve you for some months before you get the next interest. And remember what you said with the shares. If you have bought dividend stocks, then it's like you're being serviced by dividend. Then at one point, interest comes in for board, dividends from shares, interest from board. So you have something that is taking care of you in your retirement without selling. Remember, you have not sold this board and you have not sold your shares. They also offer low risk. They are more stable than shares. Why? In terms of price movement. Remember, when you buy a board and you are not looking to sell in secondary market, you are not even thinking about the price. For shares, immediately you buy and you want to sell, you have to keep on looking the market. At one time, prices are high. We said there are cycles. There are times the prices are high, there are times when prices are low. Like now, we are headed to election time. We never know what will happen. Share price will go down. Is this the right time now to go buy this board? Because you are guaranteed that stability. There is low risk. But remember, for shares, you only lose when you do the actual sell. Even if your portfolio is on lead, if you don't sell, when market rebounds, it will recorrect. If you sell, then you're making the actual loss. So that's why shares, they have high returns, but high risks. Boards, on the other side, they may have low returns, but not that low. We'll come to comparison between shares and bonds, but they have high returns. They also have predictable returns. Even before you invest your money, you know how much you'll be getting every 6 months. Like now, if you're putting 10,000, you already know every 6 months you have 590, the next 5 months, 590. You also know how long your money will be invested. If it is 5 years, it's 5 years. After 5 years, you get full amount back. What if you decide to sell in between and the prices are low? You may sell at a lower price, again making losses. If you decide to sell about time when interest rates are going down, that time prices may be high. Then diversification, both balance your portfolio. You don't rely on shares. Like when market is affected, remember you have bonds which are giving you interest. If you go back to the time when market was around, I think 2008 to around the next general election, the market was a bit low. That time the board comes in. If companies are not giving dividends, then you have interest that is coming in as from the board. When market recovers and companies are giving dividend, then you're getting twice. You're getting your dividends and you're also getting your interest. Now, as we wait to go to elections, as you have said, prices may go down. You may want to put your money in bonds right now. In the next 6 months, the interest that you get, if prices have gone down for shares, you buy shares. Instead, because this interest, you don't want to return it to the board, because maybe that time you may buy at a higher price. But if prices are still low for boards, you can add more. But I would advise when you get this interest, again, the same thing we said with shares, don't use that money. Buy more shares. So you move boards interest to dividend shares. Then when you get your dividend, that dividend you can return it back to a dividend stock, or you got a money market fund. So you're rotating your earnings across different assets, growing wealth. Remember, my channel is all about growing wealth. So now there are key terms you need to understand before you get to boards. One of them is issuer. This is a person who is borrowing. Then there is the investor, the person who is reading. So you're acting like a bank. You are ready, say EABL, which is a private company, or government. So you are reading your money to them. Then there is coupon, the interest they pay you. Remember, you have not withdrawn your money. You have not sold that board. It's free money they are giving back to you. Then there is maturity. Is the date now you expect to get back your full amount? And that amount is the principal, the original amount that you invested. So these are terminologies you get in boards, among others. So let's go now to corporate boards. And if you have any question, you put on the chat. So corporate boards, these are loans investors give to companies, like now EABL. These are not giving to the government. Government is it's called fixed income. So corporate boards are boards that you give to companies. There is treasury boards. Treasury boards are the ones now you loan to the government. Those ones they are listed at CBK. Corporate boards, they are listed at CDSC, Kenya, and NSE. So they trade at NSE, but your holdings are in CDSC. For treasury boards, trading is on NSE trading platform. It's called Avento, but your boards are listed at CBK. So that is the difference. The custody for corporate boards is the same as shares, CDSC. You get them in your portfolio valuation with your broker. And a question would be, can I buy a board with different brokers? It's the same as shares. You can open multiple accounts with brokers, but using the same CDSC number, because you can only use one ID to open multiple accounts, the broker, but with the same CDSC number. So that CDSC number is shared across the brokers. So you can buy a board with the AIB, you go and buy the other one with Daya, you go there and buy the other one with ABSA. If you go to AIB, you won't see for the others. If you want to see for the whole market what you own, you go to CDSC, get a statement. That a broker can give you a whole CDSC statement. So if you go to CDSC and request your CDSC statement, you'll see everything you own in NSE market. That is the boards you have bought with each broker and the quantity. So for corporate boards, you're just lending money to a company. In return, they give you interest every year, which will be sent directly to your bank. It's not sent through the broker. That is sent directly to your bank. So what is now the difference between corporate boards and shares? Remember, corporate boards you are buying, you are loaning your money to companies. So what is the difference between the two? Shares, you are becoming a part owner of the company. So you are buying a shareholding of a company. And the returns that you get will depend, one, on price movement, which is called capital gains, which depends on company performance. If company are making profits or their revenue, they are growing, then you expect even in the market, the prices to go up. Also, when they make profits, they may decide to share that with you in form of dividend. Dividend could be either cash, which is sent directly to you, or in form of additional shares called bonus shares. They are free shares. So if you have 10 and they say they're giving 10 more, then you get 20. Remember, after X dividend date, prices are refactored down by the same dividend amount. But after some time, the market recorrects. The price may go back to the time when you are getting this bonus. So you get like double the profit. So for shares, through dividends, either bonus or cash dividend, or through capital gains. When you buy raw and you sell high. However, for bonds, you are lending money to a company. You are not owning that company. That company actually owes you money. Then they are paying you interest. Now, instead of dividend and capital gains, you can make through fixed interest, which we call coupon. However, you can decide, I will not hold this bond to maturity. I can sell in secondary market if prices are in your favor. So that is called capital gains. So for bonds, there is that fixed interest coupons, or if you decide to sell at a high price, then capital gains. Now, the difference in the two is that shares, there is no interest, there is no tax you pay, there is no capital gains. For bonds, however, when you sell in secondary market, there is usually 16% withholding tax. So when the broker sells for you, always request for contract note. It has that element of tax, 16% withholding tax. I think mostly on treasury bonds. For corporate bonds, I may need to clarify that with the team. And you don't declare these. So again, now corporate bonds versus treasury bonds. Treasury bonds, we have said they are issued by the government. They are safest assets you can invest in stock market. Why? Government can never default your bond, but their interest, they are a bit low. Most of them I've seen it's around 8.5%. However, for corporate bonds issued by private companies, their risks are higher because a corporate can default. A corporate can default. Remember, EABL have told you it is unsecured. That should be a red flag. That tells you if they don't have money to return to you, they can default. But that does not mean they can't pay you. You see at the end, the market is fully regulated. But their rates are a bit higher. So in terms of rates, corporate bonds, they are better. In terms of risk, it's treasury bonds. So it's all about your risk appetite. If you compare now corporate bonds with the money market funds, their rates, some of them they are high, but most of them they rate between 10 and 12. But remember, they keep on changing depending on market conditions. For corporate bonds, it's a fixed rate, higher than treasury bonds for the duration that that bond will be listed. So now we come to EABL bond, that is the East Africa Breweries bond. You are lending them your money in 2025, they will return in 2030. Why are they borrowing this money? So, and confirm on the chart, you can hear me? You can hear the chart is quiet. Okay, let's continue. So East Africa Breweries is borrowing money from the public through a board. And for that board to be listed at NSE, it needs to be approved. So this is something that is already approved by the regulator, CME. Then announcement made through NSE and also media. And note media, not social media. Why? Just I think this month we had Kenyan resorts reaching on social media. Then they dissolved. So for EABL board, it was announced through NSE and media. Social media, they only come in to spread the news. So it's only supposed to be announced through NSE, media, and the company's website. social media is just a platform to relay information. So before you take information from for the market from social media, always verify with NSE, CMA, media itself, news, and also company's website. If it is not listed in any of those, first ignore it until NSE releases it. So for EABL, it has already been released to the public. So that means you, as the investor, who already have a CDSE account, if you don't have, you can open one. The IB Access, they already have the digital platform. You can open the account remotely. Once you get your CDSE number, now you are ready to lend your money to EABL. Then they will pay you interest in return. This is an example of a corporate board. It's not shares. It's a good example because EABL, they have shares trading at NSE. That is different from this board. In your portfolio valuation, you see EABL shares if you have 1,000. Then you see EABL board if you have loaned, let's say 10,000. You see those as two entries. One is shares, the other one is bonds. And it's not a must you own both. You can have shares and not have board on your portfolio. You can have board, but you don't have shares. So it doesn't mean you have to own shares for you to buy the board. No, you only need to have a CDSE account. So you're not owning shares, you're just lending your money to EABL. They decided not to call it a board because that is clear to everybody what you are doing. That's why they are using the note. So when you buy this note, you'll be lending your money to EABL for 5 years. Then they'll be paying you interest every year, but paid semi-annually. You have said in May and November. So then why are they borrowing? One, to refinance the existing loans and also support expansion. And they said in their prospectus, they are not increasing their overall debt. What does that mean? It's actually the existing loan, which is just restructured for another 5 years. Maybe that loan is due. They just restructured by borrowing. They pay that loan. Now they start paying another one now for 5 years. Then they pay you interest until maturity. So this helps them manage costs and also remain financially stable. In the next tutorial for training for NSE, we'll try and see EABL, they announced a dividend. Now with this board, we can try and analyze and see whether it is a dividend trap. What does that mean? The company you have bought shares, they keep on giving you dividend, but is this dividend financed by their operations for that financial year, or they are borrowing from external sources to finance that dividend? Hopefully that's not the case. Because then at one point they may fail to pay this bond. Remember, that time they are required to pay out. Remember, they are regulated by CMA. What do? They stop paying dividend to finance the debt, meaning dividend are cut. That's why you need to be very careful when buying shares. Always check the things we have gone through. Are they borrowing to finance dividend? You can always start from financials. I think I've done the video on my YouTube channel on how to analyze. And next Wednesday, we are going to now into details, especially now comparing debt against dividend. Because this is one of them. Remember, they are getting into debt. They are paying dividend. Does it mean they borrow to pay dividend? Or is this dividend coming from their operations? But if you have seen their full audited results and you have interrogated their prospectus, the full booklet, you realize they're actually on growth trajectory. I think I've seen so many innovations on the drinks they intend to bring in. Hopefully, even this debt goes to service that. So some of things you need to know about EABL. The tenor is 5 years. It's from 2025 2030. Interest rate, it's clear, 11.8%. So you take the amount you want to put in times 11.8 over 100. That is the interest you'll be getting annually. Divide that by 2. So every half year, that's the amount you'll be getting. And it will be paid every May, November. Directly either to your bank or if they are allowing M-Pesa, to M-Pesa. Minimum investment, 10,000. Then in multiples now of 10, you can decide to beef up to now in multiples of 10,000. So this allows everybody to get in, including the low income earners. That's the beauty of corporate bonds. For treasury bonds, I think it's 50,000 minimum. Beefing up, I think it's with the same 50,000. For corporate bonds, I think it's 10,000. It will be listed at NSE. Remember what I've said? They will be loaded together with your portfolio valuation. When you log into DigiTrader, EAB DigiTrader, or online portal, you'll actually see part of your holdings. So you can be able to track your bond daily, but you don't need to track if you are trying to target 5 years without selling in the secondary market. Offer will close in 10th November. So for those who want to apply, we'll go through the process. You can do it in your free time, but do it before 10th November. Then 18th November, if you have made your bid of 10,000, that's when you pay. If your bid is successful, that's when you pay. Remember, you're owning your money, so you need to give them the actual cash. So you bid, if yours is successful, you need now to give them that money. You give that money on 18th November. Then it will be listed now for trading. That is the time you see that board on your portfolio valuation, and you can now trade on 25th November. Now from 25th November, you can decide to sell your board if prices are in your favor. And prices are different from interest rate. So then how do you earn from this board? It is through the interest. We have talked this over and over again, interest. I want that to be clear to you. Every May and November, there's some money you'll be getting. So that's some money is the total amount you put now times 11.8 over 100. Then you divide that by 2. So May, that's the amount you get. November, same amount. The returns will not change. They are not affected by anything. It's not like dividend where if a company makes loss, they can decide to lower their dividend. When it makes profit, they can decide either to beef up the previous year's dividend or give similar amount, but also give another special dividend. Special dividend, we said, is a dividend given by a company out of extraordinary profit. So they are giving you the normal dividend. Then they have made an extra profit. They decide to give it as another dividend. So you get 2 dividends. The normal one, maybe it could be first and final, or the final, or interim. But they also say we are giving you a special dividend. For interest rates, it's fixed. Returns don't change, no matter what happens. Even if economy collapses, you still get back your interest. It is fixed. It doesn't change. What changes is if you decide to sell in the market, in the secondary market. Remember, prices are affected by market conditions. So that is the difference. If you decide to hold your board to maturity, you'll be getting the fixed interest until maturity. Then you get full money without any coin deducted back to you. If you decide to sell in secondary market, you are subjected to there is the tax I've said. If corporate boards, they have a tax to be paid, remember it will be deducted. There are also broker charges. There are also levies to be paid. Total comes to around 0.34%. That is broker commission, NSE, CDSE, and CME levies. Then in shares, we usually have stamp duty. In board, it's withholding tax. I may need to confirm with corporate board if you're selling in the secondary market, whether you're subjected to tax. So those are the things you need to be aware. When you're selling in the market, price will go down, and there are also charges. If you decide to hold to maturity, you get back your full money. Remember, there is nothing that is charged out by any broker or even CBSE. There is no custody fee or such charges. It's not like shares where brokers are also charging you maintenance fee. Maintenance fee ideally is like custody fee. There are also charges for selling and buying in the market. So then how do you earn? For EABL, twice a year, May, November. Payment is not made directly to your broker account. It is sent to your bank. Even dividend, they usually pay directly to you. So for EABL, interest will be sent to you, either to your bank, or if they'll be paying via M-Pesa, to your M-Pesa. So let's take an example here, 100,000. You want to put it in the board. Remember, it has 11.8%. So if you have to do simple mathematics, in 1 year you get 11,800, but paid semi-annually. So every 6 months you get 5,900. So in May you get that amount in your bank. Then in November, similar amount, and that continues until the maturity of board. If you don't decide to sell in the secondary market, if you decide to sell, it's the same as the shares. You are no longer the person who loaned that money to EABL. It's the person who is buying now who becomes the beneficiary of that interest from the time they have bought that board to maturity. So you forfeit the interest, but you get back your money. But remember, you may sell it at a lower price, depending on market conditions. So you may end up losing. So always check at the price you are selling it. So over 5 years, then you multiply the interest per year, 11,800 times 5. So that is the return you get for loaning that money to EABL for 5 years. So you can do simple calculation. If it is 1 million, then it's around 118,000 divided by 2, 59,000 every 6 months. If you have loaned them, you are 1 million. If you have bought board worth 1 million. So if you have to do 118 times 5, I want to see the total return at the end of the board, because most of us, we are keen on the returns we get. Yeah, it's 118 times 5, 0.009. It's around 590,000. So you give 1 million to EABL for 5 years. At the end of the 5 years, the total interest you have received is around, is it? Yeah, 590,000, half a million. I'm not sure whether you can make that money in NSC that quickly, unless this year when market have been prices have been going up. And also good dividend. Remember, we are going to election year 2026, 2027, 2028. 3 years of instability if there is anything. So 3 years in shares, 1 million. I don't think myself I would bet on shares. 3 years I would not have gained anything in shares if we project instability during election time. Remember, we have Gen Zs. We have seen what they have done previous years. I think it was last year. I'm not sure whether last year, but one. If there is instability, remember NSC is affected. Do you want to bet your 1 million directly at shares? Remember your gains now, you start getting them after fourth year. That is in 2025, 2026, 2027, and 2028. So from 2029, that's when you start seeing some gain in the shares. But remember, prices will have gone down. So before the market fully recovers, is another, say, 5 years. I would put my 1 million in this board. Yes, there are risks, but EABL will not default. By that time, I'll get my 1 million back intact. It is not affected by prices, and my 590,000. That's around 1.6. I can come back in the market. When this market now is recovering, I buy shares. Now start taking my dividends. But it is a decision as an investor you need to make. How much do you want to put? How much do you want in return? Then when you get these, remember these interests, they are not paid at the 5th year. They are paid every 6 months. When they come, this market is down, buy shares. So you are still buying shares when prices are up. These shares you are buying, they are giving you dividend as you wait for the next interest. So that's how you build your portfolio. You still have your board. This board is helping you buy shares. So in simple terms, my 1 million I put in bonds. May next year, market is down. That's when my 59, is it 59? Yeah, 59,000 will be coming in. Not 50, yeah, 59. If I am doing with 1 million, around 59,000 will be coming in May. That 59,000, I buy shares, actually for EABL, which will give another good dividend. November, prices again go down. Another dividend from EABL, my another 59,000 I put there. Maybe this time I can decide, let me buy KCB. Next year, part 1, now in May, 59,000 comes in. I decide this time I will not buy any of the 2 stocks I have. Let me buy Safaricom. Safaricom is a growth stock. They usually invest much of their profit, but give substantial dividend. So it is a growth stock. At some point, you find the prices have gone up and they are giving good dividend. So you're using interest from board to buy a dividend. Then that dividend, when it comes, it buys another dividend. Remember what we said, dividend recycling. But here now you're using interest. You recycle this interest into a dividend stock. Then that dividend you get from that dividend stock, you buy another dividend stock. So this year, when there is instability, you will not even be thinking about NSE instability, prices are going up or down. You are thinking, waiting for this interest to come to buy when the market is low. So that is the calculation. Amount you're giving times the interest times the 5 years. That is the total interest you get. So these you can easily project even before you get in without any assistance from an analyst. That is the formula. If you're looking to invest in this board, just take the amount that you want to invest times 11.8 times 5. That is the total interest you get at the end. Then you take that interest, 59, let's say 59,000, divide by your investment of 100,000. You want to see the returns times 100%. It's around 59%. If I'm not wrong, if my mathematics is right, is it 59%? Yeah, because it is like you're getting half the amount that you have invested, in short. That is if you have to wait for 5 years. 59%, I don't think you can get it in NSE in 5 years. Unless like now the markets have gone up. Then again, what has driven NSE market? We have said this time and time again. One share trading rule brought in other investors. They excited the market. You find the market is actually driven by small shares. 100 shares can drive this market, even 1 share. Look at the ETF for gold. There was a time it was in Business Daily. People are buying that. But for us in the market, we're actually looking for those people who are buying that gold. There is no people. You find it's one person who came in, put a market order. There are prices which are high in the market, clears everything, you rock at the highest price. Because business data and analysts don't have access to the market, they didn't see how the price movement happened that day. So they report people are buying gold, yet it is one person or two people. Most of these stocks, you see, they're expensive. The spreads, the difference between the top bid and top ask is so wide that one trade can move that price up. So I hope now you understand on the board and what we expect in the return. That's why I've taken, if I look at the chart section, maybe you can pick that formula, note it somewhere. Note it somewhere so that after this, you can just do your simple calculation. We'll come to Q&A. I can see there are questions on secondary market if you are to sell. But those are the returns you get at the end of it. If you are long-term investor for both, remember this is long-term. You are putting your money there, get full amount. You are not short-term where you are running your money today, you bid today, then after 1 week you want to sell. So we go to the next one. How do you apply? I want to go through this quickly, then we go to the portal. We see how you can apply. So anyone, as long as you have a CDSC account, and note CDSC account, the one you buy shares with. And as I said, opening a CDSC account is very easy. I will show you how you can open one with EABL access. If you don't have, if you have an account even with another broker, you can use that. You don't have to go and open with EABL access. If you have a CDSC account and you are ready to invest, you can use that. So it is open to both new. If you are new, that is, you don't have a CDSC account. And as I've said, opening a CDSC account, you can do digitally through EABL access, or you can go to any other broker and open manually, where you can fill in manual forms. And also for experienced investors, those who have already been buying shares, or you need CDSC account. What do you need to open a CDSC account? Digital ID number only, then your details. Manual, you need to fill in 2 forms, a broker form to open internal broker account, and a CDSC 1 form to open a CDSC account. Then you need to give your copy of ID, copy of KRI PIN, passport size photo, and bank statement or M-Pesa statement, depending on the broker. So those are the requirements for manual forms. Digital, only your gadget, and you remember your ID number. Make sure it belongs to you. Manual broker form for opening broker internal account. CDSC 1 form to open a CDSC account. ID copy, because it is required. KRI PIN, though there is no tax. That's just for record purposes. Then passport size photo, because they need to know you. And copy of bank or M-Pesa, everything belonging to you. Then who can invest? Again, CDSC number, who can open a CDSC account? An individual. You as an individual, you can open. As a company, you can open. And as a chama or group. And I believe even in this board, the same groups, because they're using the same CDSC account, you should be able to buy EABL board. There is no special process. However, maybe for company groups and circles, you may need to go straight to a broker who is offering that service. And you can start with 10,000, as I've said, and make sure it is in a multiple of 10,000. So 10, 20, 30, like that. So this gives you easy entry to everyone. So then how do you apply? First of all, open or confirm your CDSE account is still with CDSE. So that you do through your broker. Or if a bank has a brokerage arm, you can use that. There are banks which have a brokerage arm. That's why I've included banks there. But banks are not stockbrokers. They don't trade at NSE. It's only brokers who are around. There are banks who have custody. Custody, they don't trade. They can't open. They can't trade for you at NSE. But you may find they may be able to open a custody CDSE account. So it's all about what you want. If you want an individual account where you own shares and public knows it is you who owns shares, you open that with a broker. If you don't want to be disclosed as an investor, mostly this is done by politicians and also those people who don't want to be disclosed outside there, they do through custody accounts, where it is the bank that knows you, but the market doesn't know you. Just go to NSE and ask for the Dinyoro's CDSE account or Ichungwa's CDSE account. You will not see it, but from custody level, you can see. So that's how it works. So then after you have your CDSE account, then you go to this link. I will go to it after this. Then we see how you feed in your details. You feed in the application form. It's a very simple form. You submit online. There is nowhere broker is coming in. Even EIB will not know you bought that bond with them. There is nothing you are charged when you do online. There is no charge. It is you doing it. It will only be credited to your CDSE account. Why am I doing this training? You will not have 5 brokers telling you to buy this board because they know they are not getting anything on primary market. Actually, I should be telling you about primary market. Let me note this: primary market and secondary market. Brokers make money on secondary market. So if it was trading on secondary market, you see a lot of noise out there. In primary market, the broker is not making money. Even on government board, you can do it directly at their portal. You only tag the broker so that the time you're coming to sell, you have a broker to sell for you. That is the time broker comes in and they earn commission. And please don't expose me to brokers. I've given a secret that I'm not supposed to give. But this training for everyone, irrespective of the broker you're trading with. So once you fill in the form, submit. There is no charge to the broker at all. You pay actually directly. There should be, you see in the portal, there is that tab for payment. You wait for your bid to be processed and allocation to be done. Once allocation is done, you'll be required now to pay the money to EABL. Once you pay, that's it. The board now belongs to you. You start earning interest. What you got to do through today is fully online, paperless. However, if you want to go through the hard way, Absa Securities, they are the ones who are offering that service. Hopefully, the brokers will also pick up. So after you invest, then you get email confirmation showing you successful allotment. Then if you go to your CDSE account, automatically you see it in your portfolio valuation. Interest, as we have said, and I'll keep on saying, it will be paid the same way dividend is paid to you direct. So it will be paid to your bank or M-Pesa twice a year, May and November. So let me go to that. I think let me finish, then we go to portal, then we come to Q&A. Let's just briefly go through these. So then you have invested in this bond. So what next? Remember, EABL have your money. You have bond in your portfolio valuation. So what happens next? You have 2 options. Hold to maturity. That is, you wait until 2030. You keep on getting interest. 2030, you get back your full amount, plus now for the interest for the remaining period. Or you can decide to sell early in the market if you need your money early. This is called secondary market. So if you are to hold to maturity for 5 years, you'll be getting your interest May, November, plus the entire principal, the original amount. You get it back at the end of 5th year. So 2030 around November, you get full amount plus the interest for those 6 months. However, you can decide to sell early. This is secondary market, where now you involve a broker to look for a buyer, you sell to them. So this is where the broker comes in, and this is where they make money in. This is where you pay commissions, levies, and the withholding tax. So it is a broker to pay this tax on your behalf. So there is nowhere your KRA PIN is known by the taxman. I saw investors asking, in the digital platform, you're not asking for KRA PIN. Why? And I need to file tax. There is no tax you file in NSE. It's done by the brokers. All taxes, it's broker who collects based on your behalf, if there is any at all. If it is dividend, it is the registrar. They don't file in your name, they file in there. So even for both, it's the broker to pay in their name. And they are supposed to do that every month. So you can sell your boat through NSE using a broker. That's why it's very important to have a CDSE account with a broker. And it also depends with market conditions. If prices are in your favor, capital gains. If they are down, then it is capital loss. And I don't believe you're putting your money to sell at a loss. And for those investors who are not risk averse, if you see maybe you're bored, maybe the broker is also showing you the prices, that it is a loss position, don't sell. Only if it is at a profit position and you realize this profit is enough instead of waiting for the next year, but don't sell. Remember, you get your money intact. If you give 10,000, that's what you get at maturity. If you decide to sell, however, remember, even the person who is buying from you can decide to negotiate. You might even get a lower amount. Then, is it safe to get into this EABL? Remember, you're committing your money. We have had instances where I think it was Chase Banker, which may have defaulted when they had listed. I'm not sure whether it was we paid back. And there was a question on that on WhatsApp community before it got full, whether it is safe to get into this, considering what happened with Chase Bank. First of all, the market is regulated by CMA. CMA made sure EABL told you it is unsecured, so you already know it is unsecured. If they default, they can default. This board is listed at NSE, one of the safest market. I've never seen NSE list any product that is risky. Even derivatives, it's only that we don't understand how it works. Look at NSE, you will not fight Forex, you will not fight CFDs trading there. They trade in international market. Why? Because these are risky products. NSE will not allow investors to get into risky products. And who is NSE? NSE, it is you as the investor because you are shareholder, and percentage of it is brokers. Initially, it was owned by brokers. So brokers ideally cannot allow you, those brokers who trade at NSE, to trade it in the risky products. That's why Forex and CFDs are not trading at NSE directly. You trade through other brokers who are connected internationally. Even if this board is unsecured, they can't default. There is CMA and there is NSE. Before listing, they had to give that comfort. EABL is a strong company. It is giving dividends. Whether there is post-election violence, whether there is instability, people will still drink. Sorry to use that word, drink. They will still drink. That's the reality, which means what? EABL is still making money. Whether economy is up or down, people will still drink. It's still making money. So chances of defaulting are very low. So even if it is unsecured, it is not a risk. And unsecured here means they have not given collateral. Remember, it is a loan you are giving them. There is nothing they told you. If in case we default, you can sell this. They have not said that. But remember, they have a strong reputation in form of dividends and also strong and solid financial performance. Look at their audited results. It tells you, if you look at that booklet, forget about the other companies which have done condensed financial results. Look at EABL. They did a detailed one. In the booklet itself, they have even detailed what they are intended to do. So even this board is going to lose investment. So why would they default if they are doing expansion? So it's fully secure. I would advise you from a personal level. You have seen the returns you can make. With 1 million, 5 years, 590,000. Actually, half, it's like you're earning half of that back. These you can't get in shares that easily, especially now. And I'll repeat again, you're going to election. 2026 campaign, 2027 election, 2028 a bit of instability if there will be dispute. 2029 economy starts to recover. Before that, 2030, when economy is recovering, it's when they are paying the final your principal back plus interest. Remember, shares will be affected all the way to 2029. That's when the market may start recovering. You want to put 1 million into shares and wait for that duration. Well, you put it now in the board, then when you receive the all interest you get in 2026, buy shares. 2027, buy shares. 2028, buy shares. 2029, buy shares. 2030, market will not have fully recovered. Your 1 million, you can come now, buy the shares that you want to buy today. And today, prices are high. That 2020, 30, prices may be low. So you just do simple mathematics. Here is the slide. Simple mathematics. It is easy to make the decision. Where do you want to put your money? But don't put all your money in both. Again. Remember, you're waiting for 6 months to be paid. There are also dividend stocks which are giving dividend. So if you have extra cash, for now you can put full amount both. Then going forward, you beef up your share portfolio. And I hope we are running something. So risks to note. There is interest rates. If market rates goes up, then both prices may temporarily go down. So if interest rates are hiked, both prices may temporarily go down. These may affect your resale value if you're intending to sell that board. So if you're buying to sell board, then you need to be afraid of CBK rates. Observe how they perform. RSA rate, risks. You might sell your board, then you get less amount than your initial amount. Remember, here there is no bargain. You are selling to a willing buyer, and they're the ones to that point dictating the price is fair to them, depending on the market. In terms of tax, there is withholding tax on interest that you don't file at all. It will be done by EABL registrar. And as you know, there is no capital gains in NSE when you're selling. It's only withholding tax on both. So then, as I've said, we are going to election time. You know, right now it's on suspense. Initially, you'd project what will happen. By now, you'd have known what will happen during election time. For now, we don't know what will happen. Initially, we used to know who competitors are. By now, we don't even know who they are. So we never know what will happen. With that uncertainty, I wouldn't advise you to risk your money. There is a safe haven where you can put your money. Where you can put your money and expect to get it in full plus your profit intact. Why? Fixed returns every year. This market is less volatile than shares. Your principal is not affected. You get it back as it is. So to get peace of mind during this time, you can put some money now in bonds. Then the next month, you can start buying shares. You continue accumulating shares as you build portfolio for your retirement. Remember, in the previous tutorial, we have talked much about retirement. You need to have something in your retirement. So continue building that portfolio of shares, but make sure you also have a board that is helping you with the interest to build that portfolio. So the question is, should you now then invest? If you're looking for steady passive income without having to watch those prices, I think for the last 1 month, most of investors have been asking, the prices are going up, do I buy? Prices have gone down, why sell? International market, prices goes up, do I buy? Prices go down, you are in a loss position, you want to sell. That you not have with the EABL board. You buy and leave it there. And don't even try to look at the prices if you don't intend to sell. You just say 2020 that I need my money back. Whatever happens in between, I only need my interest. However, if you're looking to sell, I've said interest rates will be your friend and prices. You don't want that stress if you know what happens in shares. For those who buy and they want to sell early. That is for short-term traders. For long-term who are not looking for capital gains, then prices are never awarded to you. You buy and wait. Remember, there is something we have called DCA, dollar cost averaging, where you buy shares, some at a low price, some at high price. So at high price, you're buying few shares. At low price, that's when you recover, you buy more shares. That averaging lowers this price you got at a high. It goes down with a very huge margin. You find your break, because now the average is your break-even point. You find it's something that is achievable in near future. You find you're not in a loss position. But if you are buying and selling, and you are watching your portfolio, especially those who check whether prices are going down, whether you are in loss position, you will end up panicking. Me, I would advise you, when you buy even bond and shares, don't be tempted to look at portfolio valuation. You already have, when you log into a platform, you already have a summary whether you're in profit or loss. Just check that to motivate you to buy more. If you got portfolio valuation, just take those ones which are in profit to motivate you. Then those who are in red, if they are good stocks that give dividend, actually buy more when prices are down. Because now you push your average cost down. Again, the red you used to see in your portfolio may turn green without any huge price. And boards EABL, it's offering you a balance between risk and returns. Remember, as I've said, EABL, it's not a company to default. We are going to festive season. That time they make a lot of money, give dividend. So even if I said dividend trap where dividend is financed by debt, I said EABL, that's not the case. If you look at their long-term growth plan from their financial results, I think the latest ones, you see they have a good plan. We are waiting for the next results when they announce to see if some of them have been actualized, or it was just the departing for paper. Then it's a perfect one for people who are planning their wealth for long term. And I said long term is where you find time. For shares, we said first 5 years is investing. 5 to 10 years, that's when you start seeing some good dividend. So first 5 years, investing dividend. Next 5 years, up to 10 years, you start seeing some increase in dividend. Reinvest again now, over 10 years, you start seeing real growth at NSE. For bond, the same thing. When you put your money, the first the first 1 year, you may not see substantial returns. Why? Because we are not accounting for our interest. That's why I said this interest, make sure you determine it in shares. That way you can account where you took that money, or you can decide this interest is what I used to pay school fees for my children. That way you can account for it as a long-term wealth builder. If you're looking for retirement, then go for it. This interest, put it in shares that give dividend. Don't go for growth stocks that you're looking for price. As a retiree, you don't want where you are hustling with market prices. You end up panicking, and you know that time, that's when other things come in. You are thinking about now how you pass wealth to your children. That time, you can panic easily and sell it. So target dividend stocks. All those videos are on my YouTube channel. I'll give that link after this. After I'm done, when I'm logging into that platform. And also anyone who is looking for predictable returns. You already know you're being given 11.8%. You only need to factor tax if there is any, instead of going to NSE and speculate. Then how do you build your portfolio with corporate bonds and shares? I've said, buy bond, use interest to buy shares. When you get dividend, buy more shares. Build that portfolio. So you have growth and stability. Stability goes, board will give you back your money, shares grow. So one, you need to have a goal. What do you want? Do you want regular income, capital growth, or you want both? Then decide how much do I want to invest. So what you want and how much do I want to invest? Because you need how much you want is what determines what you put in. Then you balance risk versus returns. As we have said, corporate bonds, they have a lower risk. It does not mean they are not risky because a company can default. It's only that EABL cannot do that, hopefully. And there is interest that when your capital is protected, you get back full amount. Shares are a bit risky because of price movement, but again, they have the highest returns. If you are looking for returns, go to shares. Target when market is down, buy, sell when it is high. But factor out broker costs. So for conservative investor, you can have 60% in board of your money. Let's say 1 million, you say 600,000, I'll put in bonds, then 400,000 share. You're balancing. If you're moderate, then you can decide 500 bonds, 500 shares. If you're aggressive and you know you can handle risks, you're looking for returns, and you don't mind where prices go, even if you're going to election period, then you can put 300, that is 30% in bonds, then 70 in shares. You chase prices. But remember, I've said and I'll repeat again, NSE currently is being driven by demand and supply speculation. Just look at it. You wake up tomorrow, negative news on Safaricom, prices come down. You wake up, equity announcing good results, we all want to buy, prices up. And we want to buy when prices are going down. When prices are going up. Instead, when these prices were there at the bottom, that's the time you'd have bought. You are waiting, let them announce results. When they announce are good, I will not even buy that day because it is open day. I will wait for 1 day, I see what will happen. Prices, when they have gone up, that's when you want to buy. A good investor, when prices are still down, buy more. When prices are going up, buy less. Because of DCA. dollar cost averaging. Yeah? You don't want to put all your money when prices are up, then you want to buy small quantities when prices are low. Average cost will still be high. And until prices in the market goes above the average price, you never realize profit. Then you can use both for stability, that I won't stress much. Shares for growth, you're looking dividend and also price movement. And again, reinvest and diversify. When you get interest, get to share. When you get bought that dividend, buy another dividend stock. Keep on recycling. You have arranged your dividends and interest such that by 2030, you're actually receiving like your salary every month. And always regularly review. There are investors who bought shares in 2008, 2007, who never, they don't even know whether they have shares. You know, that is risky. It's money you parked somewhere. Always review and rebalance your portfolio for both bonds and shares. With that, I want to go to that platform. I think there are two things I need to do. Let me check. There is a platform. We see how to apply. Let me share a link to that YouTube channel. I've shared the link to WhatsApp community, but I'll share again. Then let me explain secondary market. Secondary market, right now you're in primary market where you're bidding. You're just placing your bid. And there are two bids. There is a competitive and an non-competitive. Competitive is where you are giving a rate, interest rate. And competitive is where you are taking the rate that is already given by EABL. But again, remember, EABL is the one to decide at the end. They might decide to give people who have bid higher, but remember, interest rate won't change. So that's on primary, that's where you bid. Secondary market is where now you sell to a willing buyer outside there. EABL is not there. They will not give you your money. You want your money, you can sell to another person. So that goes through NSE trading. So that will come to next time we are handling boards. I want to first handle treasury boards before you come to secondary market. But when you leave this session, know you can sell in the market or wait to maturity, you get your money back. So let me quickly open the platform. Let me go to the first slide. That's my WhatsApp number, just in case you have any question, you can reach out. So let me open the platform, then share the link. Then we come to Q&A. So if you have a question, you can put on the chat based on what we have gone through. Even for previous sessions, if there's any question on shares, on markets, anything you want to know on the market, you can ask. I'm just picking first the link to the WhatsApp community, because this is where I share notes and videos, both the live training and also recorded. I also do recorded version just to keep you in the knowledge. So that is the link to WhatsApp. Let me pick the link now to that platform. We go through it, then we come to Q&A. And hopefully for those who want to go together with me, there is a point I want to go through where it requires I make payment. I think there should be that, but let me pick the link. And the digital route is the easiest. Remember, broker may decide to charge you. Click on it. As you pick the number, let me pick the link. Hopefully it doesn't distort this. I'm just picking the link. In the meantime, you can be putting any question on the chat. So that, okay. So let me stop sharing this. We go to that link. Share screen. Any question you have in the market, please ask. Confirm you can see that screen for EABL. Confirm you can see the screen. Just here, that's where we are now. For those who are asking, how do I buy? That is the screen. This is the screen you use to apply for that board to bid in the primary market. This is from EABL. However, you have an option of going through the brokers. And I think currently it is Absa Securities who are handling all applications, but brokers are also allowed to assist in those applications. Here you'll get all the details. So the total issue amount is it 11 billion? Yeah. Then yield is 11.8, and the exact price. Then how to accept the offer? You just read terms, physical forms. If you go to a broker, or you can do it digitally. So let's go to, you can go through it on your own time. Let me share that link. It's there. Okay. Let me confirm it opens. Yeah, it opens. You can copy that link. So you click where it says apply now. And as you note, minimum amount 10,000, incremental 10,000. So in multiples of 10,000. You can decide, let's say we have around 8 days. Let's say you're a business person and you expect maybe in the next 8 days to receive each day, let's say 10,000. You don't have to wait until the 8th day to apply. You can apply today with 10,000. Then you come and edit and add more tomorrow, 10,000, like that until the last day. So it doesn't mean if you apply today, you are closed from adding more. No. Why? If you click apply now, it has two options. New application, resume or add more. So new applications is where you're applying afresh. Resume is where you have started the process, then you want to complete. You have filled in details you want to complete. Or you had put 10,000, then tomorrow you wake up with 50,000. You want to put it, you can add more. So I'll start with the new application. You click on new application. It requires you put your mobile number, email address, and that this is just simple mathematics. 5 + 1, 6. You answer that, then you accept terms. Then you stop. I can continue. My number is already in public. The answer is 6. Then you click submit. Remember to put full number, then click submit. You're in the screen for application. Confirm you can see that screen. You can see that screen. I don't want you to miss anything. You can see that screen, okay. You start with your, the first part is investor details. The authorized pricing agent, you can see there is Absa. If you scroll down, Sony Absa. There is no other pricing agent. But that you don't need to worry. They are the ones who will collect all the payments, pay to EABL. There is nowhere you and Absa Securities will know each other. Absa Bank. So the next thing is applicant type. We said you can apply either as an institution, or if it is a broker, like now if you come to EAB Access, we can place on your behalf. So if it is an institution and you have opened a custody account with EAB Access or a custody like a Equity Bank custody, they can do that on your behalf because it's them who know you. Like if in EIB you have a nominee account, the member CDSC doesn't know you. It's EIB, they can open on your behalf. Or individual. Or EIB Access now applying on your behalf. Remember, it is your board going to your CDSC account. So you as an individual, you select individual. Then you give your full names. Like here, I can, just for this training, let me remove that. Then your ID number, hopefully it's not validated by IPRS. Let me just use some dummy number. If it's not validated by IPRS, we can move to next screen. If it is validated by IPRS, I'll stop sharing, I put my ID, we move to the next screen. Huh? So fill in the other details, your name, ID number. Make sure that ID number is registered to the name. And that name appears the same way it is in your ID. Make sure they align very well, the way they are in your ID. Then telephone number, depending on where you're applying from, you could be outside the country, the number that you're using. Then the full number. Don't include the leading zeros, without the zeros. Then your postal address. If you have, if you don't have, it is optional. So let's assume I don't have, so that I can leave optional. Postal code is also optional. Why is it optional? It doesn't have this star. You see where there is email, an applicant, it has a red star. So only fill where there is red star if you have those details. If you're somewhere you don't know the city you're in, you can remove that. But country, you can select. Then, very important, this is where your CDSC number comes in. Which broker are you with? You click on this list. You need to know that. Which broker are you in? If you are with AIB Access, let me put that broker code. Broker code is B12, B12B. I'll put on the chart. For those who are asking, I log in afresh. Just a minute, let me finish, then I quickly come back to the same screen. You're actually putting just your, let me just go back. Let me just close this. Let me see whether it can open straight. So you click apply, you click new application. Remember, we have not, unless you had started earlier, you click new application. You put your mobile number, email, security question. It depends on the mathematics that is given in there. What is this number plus this? So don't put what I put. Yours may be different. Put that number. The mathematics that is done there, if it is 11 plus 4, that's what you put. It's actual mathematics. You put the number there, answer. Then you accept terms, you click submit. Again, mobile number, email address, security question. The question, the mathematics that is shown there. Do quick mathematics, put the answer, accept terms, click submit. Once you click submit, it will take you to this screen now. I'm filling. I hope now it is clear. So fill in your serial number, just leave it. Accepting terms, leave it the way it is. Applicant, unless you're applying as an institution, that is as a company, LLC. If you opened account using your ID, it is individual. Then you put the email address and the name. Then you put your ID number and the country or passport number, incorporation, depending on your CDSC account is opened using what. If it is ID, use ID. If it's passport, use the same passport number. If it is a corporation number, then country. Yeah? Email address, because that's where confirmation will be sent. Mobile number, make sure that mobile number is always active. They might decide to call you then. If they're not available, what will happen? The other fields which don't have a star, if you don't have those details, leave them. Country, just leave it default. Unless you're in another country, you can also select that. Here, this way I've said broker code. If you are with the IB access, you select B12. If you are with another broker, you can just Google your broker. All these, you can see then custody they are here. It depends your CTSC number you opened with them. You just check their broker code. You can always find that online. And don't use ChatGPT. ChatGPT will give you, let me see. If I can use a ChatGPT, which I was able to open right now, I would have shown you. If you are to use ChatGPT to get broker code for AIB, it will give you a different code. Don't use ChatGPT. Go to Google or you go to CDSC website. Let me see. CDSC broker codes. They are there. They're somewhere there. I hope it has everything. This doesn't have codes. Even this doesn't have codes. CDA list. There's one that have those codes. I wish they put the names, but that tells you it is linked with the CDSC. Let me see, approved. There is a website that usually have that list. I'm not sure whether it is CMA. Okay. That doesn't. I wish we could get it. There is a list that usually have those mappings of all brokers and their codes. See, CASIB. CASIB is our association of brokers. Even this doesn't have. Okay, but I think NSC may have it. But if you know your broker, you can just select. Now for AIB access, B12, then you put your CTSC number without zeros. So that number is usually 13 digits. It has zeros in front. So you need to put the zeros. That's why they are 13. So let's say your CTSC number is 56, like that. You need to add 1, 2, 3, 4, 5, 6, 1. So you need to add the leading zeros. So, but all of them should be 13. So you first type the number, then in front of it, you add zeros. All of them 13 without anything else. Then investor code. These were, I think, confusion will come in. I wish when they put here, when you select as an individual, it picks directory, local individual LI. So if you selected individual, you select local individual. If you selected institution, you select LCs, where there is a C, local corporate. If you are foreigner, then it's either FI, FC. If you are in East Africa, that is Tanzania, Uganda, in Tanzania, Uganda, is it Ethiopia? Those countries which are in East Africa, then it is EI, EC, depending on which category. So for us, if you selected individual, it's local individual. Then you click next. Hopefully, it doesn't validate good. So the next step is the application. Notes applied. It's the number of notes you are buying. That is the boards. If you need, remember from the first screen we saw the price is 1 shilling. Yeah? So it means 1 note is 1 Kenya shilling. So if I type 1, it goes to 1. Remember, minimum is 10,000. So the minimum you can put here is 10,000. Now, if you need more, then you may need to add 20, 30 like that. Remember, it is the multiples of 10, and it shows you the amount payable. If you have any frozen or pledged shares, that is, you have taken loan before, you can click here, then put the details of the lender. That is, if you have ever had a loan, but for now, just leave it the way it is. I'm assuming nobody have ever used notes. That is, sorry, if you want to take a loan with a bank or a SACCO to apply for this bond, you can click that. Then you put the details and the notes that will be pledged. But you don't want to do that. Don't try, because the interest you pay for the loan will be higher than the interest you get from the bond. Then, in case there is oversubscription, where does your money go back to? You need to select bank. If it's not a Kenyan bank, you untick, then you give the international bank details. If it is a Kenyan bank, then you need to select here which bank. Let me, for this, I just promote Equity Bank. Then branch, do they have a Western branch? Yes, let me promote that. Account number, you just put your account number the way it is on your ATM. And the name in the bank must match the name of the investor. And that's why I say the name you're giving when applying first screen, you make sure it is correct name, because that is the same name the bank has. Then you click next. How you want to pay. If it is through the bank, remember, who is the placing agent? ABSA. So you pay to ABSA Bank. Account name is EABL. That is the account detail and SWIFT code. Those are the payment details. So you are paying from your bank to ABSA Bank account for East Africa Breweries. You have their bank code and they have SWIFT code. They are doing SWIFT transfer. If you are doing through M-Pesa, that is the pay bill. Then at the account, you make sure you put UABL for hash. Now your serial number. Don't change that, the number that is shown there. The rest, just leave it. So the amount that I'm supposed to pay is 30,000. So you can come and select here. If you paid through RTGS, bank guarantee, mobile money. If you use this for brokers who are paying direct to EABL, so don't select these. PesaLink, if you do PesaLink, if you do telegraphic transfer, if you are going to ABSA to deposit cash, internal fund transfer, that is your ABSA bank customer or data undertaking. Let's assume it's mobile money. Then for mobile money, you don't need to upload anything. Yeah, for supporting documents, I think that I can leave. Unless you want to upload now the M-Pesa message. If you're doing M-Pesa, then you click next. At this point, you are in the last option for submitting. This is what I said, I do not submit mine. So you just confirm the details. You can put M-Pesa difference number. That is the transaction code for them to be able to confirm. And please make sure that code is correct. It's good if you copy paste it so that you don't make mistake. Then you click next. If you're done, you can click submit. For me, I'm not submitting. So the application is there. I only need to click submit. Now let's go back Let me close. I go to the same link. We try the second option, resume. You need to put your serial number. Remember the exact serial number you had. That's why you need to note it. Your mobile number, email address that you used the first time, then you answer the question, accept, submit. You get your application and you can edit. At that point, once you submit, you have made your bid. Your bid is there. What you'll be waiting, I don't know whether I shared the screen. Did I share screen? Because I've realized, just confirm I shared that screen for application process. Oh, okay. Because I've just closed, I realized I've not shared. I don't want you to go without those. So after you complete the whole process, you have made your payment, you have submitted confirmation, you only wait for allocation. How simple is that? You don't need to go to a broker. You already have a CDSC account. If you don't have a CDSC account, let me show you where you can get one. I'm not promoting EAB Access, that's where I work. I work at EAB Access, as I said in introduction, head of product development and innovations. You just go to EAB Access website, you come to trading, you can download the app, it's the same process. You go to online trading, it's just a simple process. It won't take time. You click open new trading account, fill in your details. If you have been referred by a friend, do them a favor, click there, put their referral code so that they can get some cash from us. We compensate them for inviting you to work. But when you log in, even you have your own referral code. Then you can complete the whole process to the end. We validate details with IPRS. You give us, I think it is 24 hours, but we have had a backlog of so many accounts. If you have not received your account, you can always reach out to me. I'm happy to help you get that CDSC account. Once you receive your account, make sure now to proceed and apply for your board. If you are looking to apply board and you don't have an account, make sure you open that CDSC account early on time so that you are not locked. Now let's go to Q&A. I hope not many questions. Well, so maybe I'll quickly go through them. I hope we have enough time. In the meantime, you can be picking my number, shown on the screen. For the semi-annual payout, will it be subjected to taxation? This may depend on EABL. I think it should. But you see, for them, they are doing annual interest. So that is the one that is on subject to taxation. Then the net is what they are paying in between. I hope that is the position. They are not clarified on the booklet, but I'll read it through again and make notes because I'll be posting now notes on this board on that WhatsApp channel, WhatsApp community and Telegram community, and also group. Clarify on selling boards on secondary market. How much can you sell? Suppose you have bought 10,000 for EABL. It will depend on the market. That time you're selling the current selling price. It could be lower, it could be higher. You could sell at a gain or at a loss. It all depends on the market. Even both, they have prices like shares. So the time you are selling your board, the broker will tell you the current selling price. That time you can decide whether to sell or not. But again, if interest rates are going up, then prices may go down. If interest rates are going down, prices may go up. That's why you find most people, when interest rates are going up, they prefer both sides because prices are going down. But it also depends on the market conditions. In general, selling and buying works in secondary market. Yes, if you want to buy or sell a board, you buy in the secondary market. If it is the first time that board is coming in the market, it is primary market. That goes through the bidding process. That whatever you have done there on that screen. How can we get corporate or treasury board sell and buy price? Those are there on NSE price list for bonds. But remember, you may need a broker to look for the counterparty to sell to you and also negotiate the rate for you. That's where the broker comes in. Very elaborate presentation. How then does one balance if you only recommend reinvestment in money market fund, purchase more shares and invest more? That was just an example. You can invest in as many assets as you want. You can even move this interest direct to Forex if that's what you want to do. If you want to go to CFT, you just play around. It all depends with the amount. You know, if you have 10,000, definitely you can't go to treasury boards. Minimum is 50,000. If it is 5,000, then you can't come to corporate boards. You maybe better go to money market fund or another product. You can even decide all this money I'm getting from all this investment, let me put them in pension. Remember, pension interest compounds. So even the interest you're earning that year, next year we run another interest. So you're using interest to earn interest. So ideally, interest from bonds, you put it in pension. It is earning interest. This interest it has earned, it will earn back in another interest. This money you access when you retire from pension. So you are free to circulate your money as and when you want. It's all about where do you get value most. You can even put in bank deposits. You open a Jambo Junior account. Just go to Cooperative Bank, open a Jambo Junior account. When these interest come, put it in your child's account. You're building that child. They're earning interest. Come and open a minor account that is linked to this junior. Buy shares, dividend. Dividend will come back to junior. So this interest, you supported junior to earn interest. You opened a Jambo Junior. We withdrew this interest you deposited plus interest, put in shares. The dividend now starts trickling in your Jambo Junior account. Accumulate interest. Withdraw that interest, buy more shares for your kid. Remember, for boards, it's over 18 years. That's when you can buy board. Junior can't buy. So you bought board, gives you interest. You have a Jambo Junior, you say Coop Bank, you receive that, you put that interest there. It earns some interest as you watch market. Open a junior account with AIB access for CDSE, buy shares, dividend stocks. They give you dividend, return that. That dividend is paid directly to this junior account. So basically, when dividend is coming in, you're just withdrawing from Jambo Junior, buy more shares after some time. And that's how you grow, just by playing around with the market. Is that true? Selling a small amount of EABL is a tall order? Maybe I don't understand your question, but if you wanted to sell your body, yes, you can sell some portion. But remember, it's all about market conditions. Corporate boards attract withholding tax rates. I believe so. When you're selling, because government boards they attract. Corporate boards, I may need to check, but I know they also have that interest withholding tax. It's a long time we saw anyone trading on corporate boards. And I believe EABL have now reignited this conversation about corporate boards. If the government defaults on its debt, will bondholders lose all their money? No. For government, I have never seen it default. It will actually take another loan or float another board to pay. Government boards, I've never seen them default. They can't. A government cannot default a local board because that will portray that government to the international community as a defaulter. If Kenya government defaults its local rules, that is boards, what will prevent it from defaulting international boards? That is loans from IMF and the rest. That's why they don't default. But for corporate, there's nothing that can happen if they default. It's only now CMA and court process. But remember, prospectus said what? Unsecured. So you may not have legal redress. And that's why when you're buying a bond, check company fundamentals. EABL, it is in NSE, it is trading there. What is its price? Are they giving dividend? Financials, did they give condensed or detailed? Those are the things you check, and you realize this is a strong company which cannot default. What is the yield to maturity for EABL? I think that is in that screen I've seen it, it's the same percent, 11.8, but I may need to check this with our board team. But I'll be posting more details on those channels and groups, and also I'll be doing a blog post. So start by now detailing everything, and if need be, I'll also be doing those recorded videos. Peter, I failed to see the big picture why this board with this interest rate is attractive. In order to buy, probably one has to pay a few percentage more of fees and taxes. No, you have seen that application process. You're not paying anything extra. You have seen the 30,000 that I bid is what I pay. In the primary market, there is no additional cost. Remember, you're giving your loan to them. Actually, it is you who should be charging them. There is no fee you're paying. When you're receiving on maturity, there is no tax you're paying. There is no fees. You're receiving money as it is. It's only the interest that is charged tax. However, if you decide to sell in the market, secondary market, that's where now charges comes in. Broker comes in, they need commissions. They will charge you. NSC, they are waiting you with their levies. CDSC, they are waiting you with their levies. CMA, they are waiting you with their levies. Government itself is waiting with you with 60% withholding tax. That is on secondary market. So it's the decision you need to make. Do I hold in maturity and earn the returns, or do I want to sell in the market and be subjected to these fees, which might eat into your returns? I hope I've answered your question. Selling in the market, that's where there is a problem. It's better you hold it up to 5 years. Lock your money 5 years, get those returns. 11.5%, you're competing with the money market, which may even go lower. Shares, right now, I've said we are going to uncertainty. Market right now is being driven by sentiments. Two people sit down, they analyze Safaricom, they say, yeah, it will perform better tomorrow. They come and post social media, everybody want to buy. Price goes up. The following day, two people, they start analyzing Chief Executive Safaricom, Peter Dego. Fake news are put in the media, price goes down, you want to sell. So for shares right now, it's just sentiment. There is no fundamentals, only a few shares that start that. And you can tell with financials. I don't want to point some, but you have seen financials. I hope now, Vahid, it's clear. YouTube channel, let me first share that. I actually forgot the sound. Here you find anything you need on investments. You know, other videos you find there, because there are also those that fit the young generation on how to make money online. Those ones, just leave them for Gen Z. You go to those videos that talk about the markets. How liquid is the EABL board? Can I get money back before ups of 5 years. As I said, secondary market, it's the brokers who will resource for you the person to buy. It will be liquid because most people will apply. It will all depend with how many people apply. If there are not many people there, then remember liquidity may be an issue. If actually it is oversubscribed, you may find even secondary market will be very active. And I hope EABL, NSC, CDSC may take these 2 weeks to train people on these boards. That way now you get investors interested. Is there any withholding tax on? Yes, this is an interest that's being paid to you. It is subject to tax. There is withholding tax. I think it should be, I'm not sure whether it is still 16%, but that you don't need to worry about it. Interest is free money you are getting, but you need to factor it when you are calculating your returns. Is it possible to be topping up every month? If so, will interest be paid every 6 months for each top up? No, the top up that I talked about is before they close the application period. However, you can come and buy more in the market. Remember, you still be eligible for the interest. Still every 6 months, depending on when you bought. It may be different from shares. Maybe you'll be entitled for the remaining months. Remember that it's the person who sold to you. So for that period of sale, there is usually that contention who gets the interest. But after that, it's the new buyer who the amount you have bought also earns interest for the remaining period. When buying the MTN, do you pay the amount in advance? Yes, you pay in advance. You saw I was supposed to set the confirmation code. Or if it is bank, you attach the SWIFT code from the bank. So you pay in advance. If there is oversubscription, there will be refund. Remember, there's somewhere we were asked to give our refund details. They will refund back the excess amount. So it is 1.8% subtract what total costs, again, just there with the holding tax. You may need to check the tax that is charged on interest for bonds. That's the only charge. There is no other charge. And also bank charges. Transfer charges, which is, I think, around 500 if it is RTGS. If it is internal transfer from their bank to your bank, ABSA, then there will be no charge. Secondary market charges, there is broker commission. It is usually 0.021. Then NSC levies, I'm not sure, it's 0.001. There is CMA, CDSC. All of them, they come to 0.034. Then tax, 16% withholding tax. That is when you're selling or buying in the market. Selling and buying. So that way it is good you get in the primary and you wait maturity because there is no charges you're paying. If you're buying in secondary, same charges, 0.34 plus tax. When you're selling, the same thing. Can you use this as a collateral for loan from your bank? It all depends with the bank, but remember this is a loan you have loaned government. Bank would not agree. It's only shares, shares because it is ownership of a company. For a board, I don't think you can use it. It will depend with the bank. You can check with your bank whether they do it. Most banks, maybe some banks accept. It's only shares that I know. Can I get the coupon via M-Pesa? Yes, you have seen you can pay via M-Pesa. You only need that confirmation code. Will the instability affect my investment in boards? No, boards is not affected. Price of the board will not affect you if you buy now and wait for maturity. Remember, there is nowhere you are losing. If you bid now, bid for maturity. You'll only be affected if you're buying and selling in the secondary market. Remember, there is price fluctuation. Would you advise one to invest 1 million in bonds or money market funds? Money market funds, rates keep on fluctuating. I think for bonds, you have seen you can make 590 something thousand. Then you just calculate the withholding tax of that. Money market fund, there are management fees which they don't tell you. The return, if they are telling you, you give you an interest of, say, 13%. Always ask whether it is net. That is for money market fund. Always ask whether it is net. If it is gross, then it includes management fees and also taxes. You also need to know how much tax you're paying. Otherwise, they may tell you 13, but what gets into your account is, let's say, 8%. You will never know whether it is 8%, because for us, we don't do calculations when we get interest. As long as it's posted, that's it. For bonds, you already know in advance. These are the charges. So for me, I will go for bonds. I think not to mention the withholding tax in the gives the illusion that there was no tax. I didn't want to include it because you're not selling or buying in secondary market. That comes at the secondary market. But in interest, any interest is subject to tax. So the figures that I did there, it's not net, it's gross interest. You need to factor withholding tax. Bidding process, we have seen how we have done. There's actually nothing you are doing. You're just filling that form, complete, and you submit. That is the bidding process. But it's not guaranteed whether if you get full allocation. It will depend by subscription. If there is oversubscription, remember there will be refunds. Maybe they will allocate a small amount. But remember, a minimum of 10,000. So you may find there is maybe those who are ready to apply, they may miss. But that is the bidding process. You have completed everything once you submit. There's nothing else you need to do. Where does the bullish on elections start? Is it at the end of 2026 or beginning of? It's not actually bullish. I think there is a mixing of these two words, bullish and bearish. Bullish is when prices are going up. You see the way bull comes with the horn, with that force. That's why it's borrowed. Bearish is like a bear, the way it sits. So bearish is when prices are going down. Bullish is when they are going up. It's not certain. It will depend on us investors. If we are carried by political noise, it will start as early as 2026. If there is no political noise, Gen Zs, they decide we will not participate in violence. It's a good election like what happened in, was it 2012, 2013? And also so was it 2002? Yeah, in 2013. That time there was a lot of stability. Market was not affected at all. I think it's only 2007 and 2017, yeah? A bit, but not a lot. 2023, I can't remember whether there was that market fluctuation, but it's nothing to worry about as long as you're not selling your shares. If you're not targeting to sell your shares, then you don't need to worry. You only need to worry if your target is to sell. So I'm looking at where it reached. So it's all about how political environment will affect NSE. But again, as I've said, market, it is you who are driving it as the investors. You mentioned several times corporate bonds are safe. Why is it treated safe than, let's say, fixed income fund paying daily? Fixed income fund, remember it's a fund manager who have created a fund that invests in bonds. Again, fixed income fund is a fund like money market fund, but this time not investing in those assets that money market fund invests. A fund that invests in fixed income products, that is bonds. So basically, you are putting your money in a fund that invests in the same bond you are buying. So why then corporate bond would be safe? You're investing directly. You know what you bought. This fixed income fund, you don't know where they're investing. What if that bond they're investing in defaults? Remember, you still have interest to be paid. That interest they're earning could be higher than what they are giving you because there is management fees. But remember, for a fund, you don't need to worry. You give them your money, you only need your returns. So for fixed income fund is more like money market fund, only that it invests in now both. Is the initial capital and interest being taxed? It's only interest. Capital, no. The amount that you're giving, the principal is not taxed. It is the interest that you're receiving. And you receive net. You receive net of tax, so you don't need to file anything. If you put 1 million, I said you get back your 1 million. But the interest that you get every 6 months is what is being taxed. Ideally, in this EABL board, in your opinion, how much can one invest? Again, a minimum of 10,000. It all depends with your pocket. Then remember, you're not buying at every month. It's between now and the closing date. Once it closes, you have to buy in the market. That it may be, the price may be cheaper, but there are also costs. So between now and the closing of this bidding process, that's when you need to invest, even if it is 10,000 every day until they close. Oh, okay, thank you for clarification, bearish. Okay. It is mentioned it's unsecure at the same time it's safe and has been cleared by CMA. But supposing the company goes under, what happens? EABL cannot go under. Its price cannot allow. And as I said, people will still drink. The companies which have gone under, I know you could be coming from Mumias, Trans-Century, and others. Mumias is because of politics in Western. People stopped providing sugarcane, didn't have any income, it had to shut down operations. CMA had to suspend because shareholders have not been paid. Trans-Century, Equity Bank, I think there is a role they are following up with these guys. Again, CMA, they can't wait for that battle because price will go even below 1 bob, they suspend. So EABL cannot go under unless people stop drinking. But if it is another company, I gave an example of Chase Banker. There is a way CMA will get that money back to investors, even if it takes forever. They will still get your money back. As I said, in NSC, even if some of the product are risky, you still get your money back. What is your view on current prices of banks? Right now, they are announcing Q3 results, which is exciting the market. That's why prices are going up. And as I said, we Kenyans, we like buying when prices are going up instead of when prices are going down. So it's a decision you need to make. Either you decide, let me put my money in board, I first watch the market. When interest comes, that time I can buy banks. But remember, banks are never affected by elections. Banks will still earn money, especially election time. That's when people are taking loans. So banks they are safe. But don't look at the prices a lot. Look at your future horizon. Why are you investing? Capital gains, look prices. If you're looking to grow wealth, look at dividends and also how you can invest. And as I said, dollar cost averaging. Buy small shares when prices are high, buy more when prices are low. And in NSE, most of stocks are undervalued. But why are they undervalued? I did, is it a blog post? Yes, explaining why the P ratios you see on company financials, you don't need to go with that. You need to calculate your own based on what you know should not be in those financials. There are some which are just revaluation of the existing assets, but when it is brought in financials, it's like they bought a new asset. If it's profits, you find the profits are just for media and also market, not the real profit they have made. So you need to do detailed analysis of those financial results, derive your own valuation from ratios to know whether they are undervalued or overvalued. If whether prices will go higher, most likely, because if they have performed better, people expect by Q4 they will announce now even better results, meaning dividend. So they want to lock those prices early. But again, don't go with the sentiment. If you have seen prices are going up, you wait for people. Most of them, these sentiments will end and prices will go down. That time you buy. So you just look at the market, watch the prices, where they are going. If they're going up, just hold for some time. Look at the fundamentals, which are whether they are the ones supporting. If they are not the ones which are supporting, it's not the right time to buy. Safaricom, there was a time it had gone up to 40. There were people who were still buying. They didn't check whether it is fundamentals or it is hype. While it was just hype in the market, when that hype ended, it went back to 20. So always check what is supporting this price. If it is market noise, don't even try. Something else we talked about last time is spoofing. Something you need to be worried about in the market. It is there in NSE, it is there in international market. Where somebody will come and show a very big order as a buy on the bid side. People will think there are people who want to buy, yet it is just one person. And they have put the lowest price where it is visible on the order, on the market depth. Then you want to sell. You pump your order to sell, supply exceeds demand, he cancels that order. Prices start to go down. You need to be aware about these practices. Or on the sell side, comes and they show a very huge order at the highest price that is visible on the market depth of the app. They know the prices. They know the top 5 will be shown, so they put on the 5th one. People think there are people willing to sell. They want to buy. You come and pump your orders to buy, he cancels the order. You push prices up. So that's how spoofing works. In simple. There is somebody else who will put that sale order highest, but he's targeting these people to come and buy. Instead of canceling to push the prices, he actually puts the counter trade. So it all depends on the intention of that person. Unfortunately, nobody can realize that in the market, including NSE, CME, and CDSE. Because it's a lot of work. How many orders are cancelled in a day? They will do a lot of work. That's why spoofing, sometimes it's allowed, but if you are caught, there are penalties. And they will realize if your account keeps on placing orders cancelling, then you are buying at a lower price. Something will be off. When selling in secondary market, it's on lower rate. What does it mean? You know, you're selling to a waiting buyer and you're subjected to the current price. If prices have gone down, you sell at that price. Meaning you may lose principal. If you had put, let's say 10,000, you may find you're selling your bond at 7,000. If prices are 11.8% is return on interest, not on prices. So that is the interest you get. If you don't want to continue accumulating that interest, you can decide to get your money back. You sell in the market. That time you're subjected with the prices that are there in the market. Recording, just join that community for WhatsApp. I'll share that and also Telegram. I've been trying to buy KPOC shares with the AB Access as of Friday, as of Wednesday, but the feedback I'm getting is session expired. Oh, there was an issue with the system. We rectified. It should be fine now. If it is still happening, just let me know on my WhatsApp. But it was rectified. It was an issue with the, we just migrated to the new host, and with migration, we expect teething issues. But at least now we have control over the platform. It's not like when we are hosted at MSC, where you just rely on their presence. Hopefully that I've answered your question. Where and how do you buy boards that we've gone through? You have seen how to apply. How do you know the best broker and the best selling price at a particular one time is ready to share? Best broker, it's all about service and self-service. Are you able to access your account alone? Because you need that. Secondary charges. Third, governance and management. Ignore financials. Those ones never look at. Those will give you wrong direction. Next, regulations, whether they follow them. And fifth, very important, whether they are regulated by CMA. And if they have had any issue with CMA and NSE, and also CTSE. And finally, whether they are able to give you research. Bank shares, what is the take on them about stability and growth? I've said banks, they are stable. They are never affected. People will still borrow loans. So that's where they make money from. In terms of growth, they are making huge profits. And most of the banks, apart from housing finance, they give dividends. Hopefully, housing finance will pick up better and start giving. How does EABL review your portfolio after making subsequent deposits? If let's say you put 10,000 now, you put 10,000 tomorrow, remember you're not putting them individually. Allocation of board will be done, I think 18th, is it 18th November, around there. The total you have deposited is what will be considered, not the small deposit you're making. To be considered as one figure. If you're putting 10, 10, 10, let's say 10 times, you have a board of 100,000, not 10 boards or each 10,000. It's not like shares. It's not 10 boards, each 10,000. No, the total amount is added together. That total amount is what is sent to EABL as the rule. No? Why is the offer 20 billion, but it's for 11 billion? There is institutional investors, there is individual, you saw that category, and there is foreigners. Each category have their own. So 11 billion, you may find it's what is allowed for, just as the local and other investors, maybe 11, is the other 9 is reserved for maybe employees of EABL and other entities. So when you see the offer is higher, but the amount floated is less, then the difference is reserved. Employees, there could also be other entities, and even other governments who may want to loan. And also banks. Banks, they don't come under institution. They don't have those CDSE numbers. For them, they will apply directly. Let me see if there is any other question. Codes, yeah, it's clarified. Codes are in the CMA website, and I think even CDSE websites, you can find them. RTGS, real-time gross settlement, means if you send your money before cut-off time, it is sent to the reader the same to EABL account same day. So your bank will debit today and deposit in EABL today. There is electronic fund transfer EFT, which is a 2-day payment. So your account is debited today, EABL will get your money tomorrow. What supporting documents are asking for? Bank transfer is it SWIFT confirmation that you get from the bank to confirm you are paying. Remember, if you're also transferring above 1 million, you may also need to submit a supporting document to show where those funds came from. If you sold a plot and you're transferring that money for that purpose from that source, then you may need to support that with a supporting document. Remember, ABSA is the receiving bank. They may need those supporting documents. So if you're doing anything above 1 million, remember also to add a supporting document so that you're not delayed. That's why you need to give your mobile number and email, just in case they may reach out. That's good you give it. Does EABL accept cash deposit? You have to do it in ABSA bank account. Then that cash deposit slip you get from the bank stamped is what you attach as supporting. We have seen all those options which you can use to pay. Can you receive coupon via M-Pesa? Yes, I think they'll be paying to your bank account that is linked to your CDSE account. Clarify again account number for M-Pesa payment. It's what you see on your account. It is listed where they have given pay bill, they have given account number. That account number is what you put because each account has its unique. I hope you won't use mine. Don't use mine because you'll be paying in my application, which I will not complete. Can I reject my share of allocation if, for example, I don't get full amount and decide to forfeit? No, once it closes, you can't do anything else. If you want to forfeit, do it before they close those applications. Once the bidding process starts, you can't cancel your application. Once allocation is done, you can't cancel. You have accepted. By submitting and waiting for that allocation means you have accepted. So you will not get a refund if you cancel. You can't cancel. You will only be subjected to selling in the secondary market. If someone applied the board through loan to pay for the loan before maturity, don't try to use loan to apply the board. Loan, you're paying interest monthly. Board, you're getting every 6 months. If you have money in your trading account, do you need to withdraw to buy board? And if yes, what's the withdrawal charges from the EAB trading platform to your bank? Okay, you have two options. You can let EAB apply on your behalf, then pay. There will be no cost, but I don't think most brokers are doing that. You may need to reach out on Monday and check, or you just withdraw back to your M-Pesa and pay directly. No more withdrawal charges. If it is M-Pesa, the M-Pesa withdrawal charges. If it is bank, the normal RTGS charges. Unless you're withdrawing money for shares sold within the last 3 working days. Because those funds have not settled, that you may be charged 5%. If it is anything that you have settled, there is no additional charge apart from bank charges. Shared rights on nascent bank index. How can one participate? Is it advisable? Okay, the index, the NSE want to create, they want to group bank stocks into one category where you'll be able to track their performance using one figure. So if that figure goes up, you can tell the bank stocks are going up. If that figure goes down, you can tell bank stocks are going down. The same way with NSE 20. share index, it tells you whether the market is going up or down in general. If the index is going up, it means the market is going up. If it goes up by 25%, it means we have bullish market. If it goes down with 25%, it means we have bearish market. That's where bullish and bearish comes in, using NSE 20 share index. Now, for bank index, it will now be tracking performance of bank stocks. You can't participate in it. NSE, they don't have an ETF from index, NSE index. The ETFs that are there are only two. ABSA Gold, which tracks the price of gold, and SMWF, which is International Market ETF. NSE we don't have. But now with this bank index, in future, they may decide maybe a fund manager, because ETFs, they are managed by fund managers or ETF providers. They may decide to list an ETF that contains bank stocks that is tracked by this index. In Kenya, we don't. Let's meet on Friday when I'm doing international stocks. We understand how indexes work. They don't trade. What trades is the ETF that is tracked by that index. That ETF has inside it the stocks that are listed, which you don't buy individually. You buy that ETF as I said. When should we expect the EAB to integrate global stocks? I'm working on that. Hopefully, there was some delay. Hopefully, by the end of November, the test December. But it depends with our developer. We are trying to push them to provide study so that you have a comfort of trading. My bank account is dormant and I only use M-Pesa. Can I still invest it? Yes, you have seen you can use M-Pesa. What you need to do in your CDSE account, update now from bank to M-Pesa, because they might use that account to pay interest. If you have a CDSE account with central bank, can you buy EABL directly? No. CDSE for central bank is for treasury boards. It's called CSD account. CDS account at CDSE is for shares. That's the one now you're using for corporate boards, because corporate boards are listed at NSE, holdings held at CDSE. So you can't use for CBK to buy EABL. You need to open a shares trading CDSE account. Corporate board, it will go for 5 years, but you can decide to sell in between. When should we expect? That one I think I've answered. How easy is it to get a broker to sell? Actually, not easy to get a broker. How easy is it to get a client? It's broker to source for you. You can get, they only need to get somebody who is willing to buy. Remember, that time, it is you are at the mercy of that broker and the client. They will dictate terms for you. I'm off topic, excuse me. Now that we have Kenyan, it's okay, ask anything. Kenyan report which shows profit. Is KPLC report rigid or is it cooked? Your views, please. Two things. KPLC report was announced at night by Mongo Capital. There's influencer on Twitter who posted it at night. Kenyan was also posted at night by the same bloggers. Kenyan disowned this. Then later they said it is genuine. It puts a lot of questions. What you only need to do, take KPLC full results, not condensed. Go to their dates. Take Kenyan full results report. Check who was them. The date from KPLC should not be, is it res? Should not be res with a high percentage with Kenyan. There should not be that huge deviation. If there is, then both reports are for media. I have done another video and blog post where I explained most of government-owned shares trading companies at NSE. Between now and the time KPC IPO will be listed, you see what does. Prices shooting up, dividends shooting up, profit shooting up. Why? Because government want to make sure this IPO is successful. I hope KPOC and Kengen is not the same thing. Huh? But again, analyze free cash flow. We did that, if I'm not wrong, in the last video in that YouTube channel. Check their free cash flow. Check their dividend. Dividend should be paid from that free cash flow. If they are paying dividend from previous year's reserves, then there is a problem with that report. You need to interrogate it. You know, these companies, and that's why I said don't look at the financials for brokers. We have seen wonders out there in the market. Those financials, when you look at them, interrogate deeper. Check what they are reporting. They know we don't check. That's why they are put there for media. And most of these companies don't give detailed. I would like somebody to show me KPOC results for 2023 financial year 2024. Full results audited. I'm still looking for it. The last time it was done was 2022 when they were making losses. Apparently they make profits and you can't get full audited results. Well, it's just, in my own opinion, just go and look for those. Let's interrogate together. I hope it was not done for KPC IPO, and maybe that could be the reason they first disowned before they were forced to own it. But this market, I said, sentiment is what is driving. You buy, take dividend. If a person with a disability decides to invest in this medium note, is she or he entitled to exemption on withholding tax? Yes. A big yes, capital. Yes. Why? Your account in CDSE must be tagged as tax exempt. I repeat again, your account in CDSE must be tagged as tax exempt. Talk to your broker. Ask them whether they have exempted you. If you gave that tax exemption certificate, if you have not given, submit it to them. Make sure they capture before that early enough. CDSE will reach out to you to confirm. Once you confirm, that's it. You are tax exempt. So it all depends with your account at CDSE, whether it is tagged as tax exempt. 18% gross interest is like that rocked for 5 years compared to within 3 or 6 months rock period. Which one is safer and higher returns to your point of view? Even this 11.8%, you need to confirm with the FUD provider, your FUD manager for the FUD. Are there other charges? Remember, there is also interest tax on it. Even if they tell you that is net, interrogate further. Again, remember, even this fixed income fund is investing in the same board. Here you are talking about 3 to 6 months. I don't think, for those who have tried money market fund, they always say the returns. When you get in there, that's when you realize this 11 you are showing here is for papers and reporting. They know you don't calculate. They tell you to post the daily. You don't have that time to calculate all those interests until the end of the month and those small charges. So for you to confirm that interest, you may need to do a lot of work. That's why for board, I would say it's better because you already know what you are being charged upfront, what you get upfront. I tried it 3 times to log in fresh, but I was getting feedback. The feedback. I will try. Oh, okay. Elizabeth, just note my number. I hope it is still on the screen. You can reach out anytime on my WhatsApp. How much is the EABL charging as with the holding tax? That's already, it's not them. It is the government which have set that. I think it should be, it is on interest for both. I'm not sure the interest, it's not there offered right now. You may need to check. Even I think in prospectus, it should be there. When you open that site, the link that I shared for application, just open those documents, search interest, you get it, tax, you get it there. They usually disclose. Where are we? After submitting the application form, do you pay? Yes, you pay. You saw I needed to attach. Actually, when you're submitting it, will tell you whether you have paid or not, if you try. Email will come after you get allocation. I think there should be confirmation for submission and then confirmation for allocation. As per yesterday, KCB was 62. Can you advise somebody to buy or wait the prices to drop? KCB is a strong company. I can't project the next direction the price will go. If they announce Q3 results as good profit, expect the price to continue going up to Q4 when they may give another dividend. So this maybe you can check. I would advise if you're looking at the price, it may be tricky because market can go either way. You just look at long term. No? If you feel this price is way high, don't buy a lot of shares. Don't give your money to broker. He is earning commission. If you ask me, I will tell you buy. But as an investor, check. Are you looking for dividends or are you looking for capital gains? As I said, prices are way high now. If you're chasing capital gains, maybe here I would give you a difference of 8 bob, and it will take some time for that counter to go to 70. It will take some time. Do you want to risk? Instead of that, buy some shares. When price goes down, that's when now you buy a lot of shares. Balance of the amount that you decided I will not buy KCB, look for another share that is cheaper, or a share that have declared dividend. KLC, Kengen, I think INM will be giving. Gabaseed, those are stocks you should be watching now. The others they pay old announcement will come in January, February, March. Ruru, yes, and EABL can only go down if people stop drinking. You know, they don't have anything else they are doing. Unless there is another business they do outside beverages, and most of them they are alcohol and hard beverages. Please advise me on the best time to use either market price and the other one when buying shares. So there are three. There is market, there is limit, and there is market to limit. Market is when you need shares immediately. You need to buy shares immediately, or you need money immediately, and you don't have luxury of taking prices. And you know the top queues have enough shares that you not execute the next queue. So if you're looking for the 1,000, it has 1,000 or more that you shown that you can use market. If, however, you need 1,000 and what is there is 100, the next one is 500, the next one is 200, on the market depth, use limit. Pick the 100, convert the 900 to limit, and wait for the market. Same as market to limit. It picks the top, the rest is converted as price Y. You want shares immediately, but you don't want to cancel that order. So limit is where you need specific shares and you don't want to wait. Market to limit is where you know market will not put all shares at top, but I don't want to pick the rest. Let's meet Wednesday when now we go through it practically. The IB account is dormant. How do you activate? There is forms you need to fill in. Just reach out on WhatsApp. I'll send you. Also, if you go to downloads on our website, they are there. You set to info. Then you can reach out to me to fast track. Sometimes we get overwhelmed. When you buy the EABL board with the IB, it will reflect, yes, it will reflect the portfolio valuation. Lots of NLC shares that jumped 16 recently. Why jump? The time to add, hold or sell. NLC shares, it's because of that. There's two announcements that have been done by their CEO. Yeah, I can't remember. I don't have. I wish I had some time to check quickly. That's what excited the market. And I told you this market is being driven by sentiment, not performance. Wait for them to announce the results. Now we see whether the price is supported. NSE is brokers and you. Remember your shareholders, brokers also own it. So let's wait for results. But I hope those announcements were not made intentionally. All other shares are moving up. Why would the house that is selling shares not move prices? Just check NSC's Twitter and also their CEO's Twitter, David Mwiti. There is an announcement they made, 2 announcements. They excited the market, prices go up. It's the same thing when a company announces a project they are doing to excite the market. You saw what happened with Stanchart and pension case. It was announced, prices first went down, but recorrected. The problem with the EIB is that they, emails, Victor, sorry for that. I am aware about it. I have talked to the team, but reach out to my WhatsApp. It's something the management is aware and they are working hard to make sure it's confirmed. Why are NCBA shares that volatile at the moment? Merger with Stanbic excited the market, price moves up. But who owns NCBA? Stanbic is by Standard Bank and not Standard Chartered, Standard Bank. So Stanbic is a strong bank. Stanbic, NCBA, who owns it? You could be waiting for answer, but then that tells you some stocks you need to be very careful. Those news that are announced, they may have reached somewhere, and maybe it is rumors. They could take forever to merge. So that's why the prices are going up. People are anticipating there's that merger. But again, I said spoofing also have other element outside where people come and put news out there to push prices up, sell their shares at a profit. They have exited, they have taken profit. You're left with a share that you cannot sell at a profit. So that's why I said who owns NCBA? It is some homework for you. So that you don't buy thinking the prices will always stay at the top, then you're left with a stock that you will not sell. Look at their assets, their liability, their performance in terms of profit, revenue. Go deeper, what are they doing in terms of innovation, expansion, and see if that price is supported by those fundamentals. Once you acquire shares for a certain company X through EAB access before book closure, when company X has declared its dividend date and that day reaches, is it my responsibility to contact registrar for payment for shares I hold, or it is EAB? Okay, it depends. If your bank details or M-Pesa details are correct, no need to contact anyone, you receive your dividend. However, if the details are wrong, registrar don't know EIB, they know EIB as a broker. They know money belongs to Peter. Peter will reach out to the registrar. The registrar will tell them your bank details are wrong. So what will Peter do? We'll go to EIB and tell them you captured by details erroneously, kindly update. Once it is updated, Peter will now tell the registrar details are updated, pay me. So it is the duty of both EIB and Peter. Peter have to make that, as a client, you need to make that responsibility to reach out to the registrar so that they tell you what is wrong. If EIB reaches to them, they will not be told what is wrong because EIB cannot, we will confirm your bank details based on what you give, and maybe that's also wrong. So it's always good to make it easier for you, reach out to the registrar, copy the broker, so that when you're told to update, you're not going back to the broker again. The broker should be able to ask for those forms. You update, make sure everything is kept on the same trail. When the issue is sorted, registrar will pay you. Actually, when you're contacting the registrar, write a letter to them, tell them My details are wrong. These are the correct details. I have contacted EAB, they are rectifying details. Kindly pay to this new number. They'll pay you. What you don't want is to get into a push and pull with the broker and registrar. At one point, they may end up, both of them ignoring you. But remember, it is your money. Why will they ignore you? Registrar will think this is not the Peter who is supposed to be paid. They will stop communicating to you. The broker will also think it is not the Peter until you go physically to the broker. You don't want to subject yourself to that. Copy the registrar on email, copy the broker. Tell them where the issue is, give them the correct number. If possible, ask the broker to give you amendment form, copy even CDSE in that email. You are sorted. How do I get dividends via M-Pesa, via EAB stockbroker? There is a form you need to fill in, amendment form for CDSE. You said to us, we capture, we send it to CDSE. CDSE will reach out to you again to confirm. Once you confirm, they finalize the update. Kenya Re stock, it's a good stock. You know, it is an insurance company, though insurance, they are affected mostly by cranes. But I saw government, there is a project they want to give them that may support them. And I think most of government insurance, they go through them, if I'm not wrong. It's a good stock. But again, always watch when the industry, the way it performs. Are people registered, disabled, exempt from withholding tax in general? No. Everybody, when you're opening accounts, you are not tax exempt. You're actually taxed to 5% withholding tax. If you have tax exemption, that's what you need to give to the broker. They said to CDSE to actually exempt you. So you open accounts, you get your CDSE number. You give that tax exemption is sent to CDSE. They update your tax status. Or at the point of account opening, if you're doing with the manual forms, attach that tax exemption form. Account will be opened as tax exempt. So it is the broker's responsibility to tag whether you're exempt or not, based on what you provide. Yeah, with that, you just, not with PWD certificate, with tax exemption. If you're PWD, you need to have a tax exemption certificate from KRA. Genuine, that's what you give to the broker. In your view, which bank starts out highest expansion plan? Equity, KCB, Stanchart, INM, NCBA, ABSA, ideally all banks. And there is one I usually like to exempting housing finance. But now with this project for housing, affordable housing, hopefully they might get a share if there is no other entity that will get. Most of the banks, but you can always tell the two competing banks, KCB and Equity. It's not about share price, it's about their performance. If you look at the share price, then it is Standard Chartered and Agna Stanbic. But it's because these are supported by international parent companies. It's not like KCB and Equity. What date will KCB pay the share that were due for November? Share that were due for November. Which shares? I'm not aware about that. Is it dividend or? Oh, it is dividend. It's November 11th. So you wait for your dividend from 12th if it's a working day. M-Pesa 11th. 12th is a bank, is a selected bank. M-Pesa is 11th, 12th, 13th, 14th, 15th, as long as they are not weekends. So you give at least 5 days. If you have not received after 5 working days, even for banks, you can always contact their registrar. But for bank, it's the following day. And they pay in batches. Yeah, dividend is 11th November. NCBA Bank is primarily, okay. Is the largest shareholder. I think that is clear. I think with that, I have exhausted all questions. Let's meet Wednesday for NSC share trading and also interact on those platforms. I'll be creating a Discord channel. I'm also thinking of creating our WhatsApp group, but I'm worried of exposing numbers for group members. Something I've really thought hard about it. But a Discord channel, I think, will open this discussion for everyone. Thank you so much and have a lovely weekend. Thank you. Samuel, a channel, Discord channel or WhatsApp channel. I had a WhatsApp channel which only allows one way. I want two-way where we can communicate. WhatsApp channel doesn't allow you to comment. Group, they have a limit. That's why mine exceeded, so it is blocked. That's why I'm going for Discord channel. Thank you. I'll open that. Actually, I'll work on it this weekend. Thank you so much and appreciated your time. Let's meet next Wednesday.